Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Monday, June 27th. Wow, we looked like we had a follow-through day, and as a matter of fact, the market moved to a confirmed uptrend, but the market petered out at the very end of the trading day, and it's down today. I kind of wanted to show you. This. This is why it's just so treacherous right now. I'm telling you, I'm mostly in cash. I'm looking for things to short. But I'm kind of like, wow, it goes up, it goes down. I think what's happening really is that every time Chairman Powell basically boosts the rates, what he does is that they continue to buy assets. So, God, it's a push me pull you kind of world, and not an easy one to trade. That's for sure. Boy, oh boy, it is not easy to trade this. But hey, with to the victor goes the spoils. So let's get into it. Just wanted to kind of bring this up here. Well, basically we are in a confirmed uptrend. So theoretically, we had a follow-through day on Friday, and that was the big deal. And a follow-through day is 4 days up in price with increasing volume on one or two of the indexes. But let's take a look at the indexes, and they kind of slunk back today. So I'm not very, very confident with this with this rally. So I'm staying in cash right now, just looking for things, possibly to short. I was a little bit worried at the end of last week because I had 5 bear put spreads on, and they were all, they're all getting out of whack. But I think that, in the long run, which in my opinion is about 3 to 4 weeks, I do think that things are going down. So I think you got to be very, very, very careful buying things long now. I mean, the oil stocks kind of took a dump, and but let's get into it. I mean, here's the Nasdaq Composite. We were pulling up very, very nicely. We moved right to, and this is why that 21-day exponential is so important. We moved right up to the 21-day exponential. That's this green line here. But boom, right at the end of the day, ouch, we got shellacked. Let's look at the 10-minute chart. Look at what happened here. We were moving up, and start of today, well, we opened up, and then we went down, and then we rallied, and then we went down, and then we rallied, and then we went down. So the way this one worked today, it was a movement down. So where we had, the fall through day was basically right here. This was on Friday. And, you can see it. I mean, you can see it here. This was, Friday. This was Thursday. This was Wednesday. And this was Tuesday. And so, yeah, I mean, we came up. We came up again. We were following through very nicely. Boom! This is where the fall through day was declared. Look at what happened. Whoop! It's down. We're still in the confirmed uptrend, but it's just not a not a good look on this. The downward trend, of course, is continuing on the Nasdaq. Tesla, which is a big component, TSLA, they are bleeding a little bit today, but they're up after ours. So go figure. Go figure. I'm trying to figure this one out, and that's definitely true. If we can get this to come up above the 50-day line here, maybe we have something here. But here's the thing I'm seeing. I'm seeing all of this overhead supply, basically from about 900 here. That was the last pivot, as you can see. There's all this overhead supply in here on Tesla, so we really can't do anything here. We just kind of got to watch and look at it. It's kind of like watching a train wreck. So Elon, of course, is going to be laying off about 10% of the workforce. So that's looking kind of interesting. He's going to be laying off about 10%. Well, which makes sense because I mean, even though Tesla has sold basically everything they're going to produce, the problem, of course, here is that the problem is the supply chain is only going to allow them to build so many. So they're gonna, they're gonna try to conserve cash. I mean, I think what was it? Elon tweeted something like it's a cash furnace. I think that's a really good description of Tesla. But I mean, eventually, I think it's gonna stabilize. But we just got to look at it right now and just sit on our hands. I think we really can't do anything here. Talking about cars, Carvana, CRVA. I think that's the Carvana. Is that their symbol? CR. Let's see if that is. I should know this. I should know this. Let me check. Carvana symbol. It suffered a big. It suffered a big movement down today. CVNA. Boy, I should remember that. It's CVNA. So that's Carvana, and yeah, there we go. Carvana, and looking at Carvana, it's not looking good, but it is up after hours, 16 cents. It's a relative strength of 1 on that one. Look at this thing, and this is what I think is going to happen for the rest of the market, at least until the spider gets down to about 320. That's what I'm predicting. And predictions are worth their weight in nothing. So, but look at this Carvana. It's just terrible. This kind of gives you an idea of some of the stocks that came out, basically in the sort of the hype, and they're just not holding up very well. But talking about that, let's look at the spider. This, of course, is the ETF that covers the S&P. So this is really an important one. I always look at this one. I look at both of this one and the S&P 500 index, but I like this one better because this kind of, for some reason, I think this one just shows a better look. Now we are in this little short-term uptrend, and of course that basically, that's predicted by the follow-through day here. But this isn't a short-term uptrend. But what I think is going to happen, and maybe I'm a negative Nelly, I probably am actually, is when we get to about 400. And that's where it's going, and we're at 388. I think it's going to turn tail and it's going to move lower, and I'm predicting it's going to go down to about 320. That's my guess based on kind of this, kind of the way this is rolling. This is rocking here. So I think that we're going to take another leg down, and then hopefully we'll be done with it. But I think that's going to be some time off. So, the question is, like Keynes said, actually, in the long term, we're all dead. So we want to keep our capital very tight right now. I'm 97% in cash, waiting for something to work. I do have some shorts, but boy, I don't really have a lot of exposure to this market. I really would like to get more exposure to this market, but it just isn't looking like that. I'm going to be putting together a short list. And of course, if you're a member of the Action Trade Alerts, and I do that by going to www.Dallas Trading Floor and signing up for that, we're going to hopefully share that with everybody. So without further ado, let's get into the other aspects here. And this is really, the Dow Jones Future basically little changed since, so it looks as if tomorrow, and boy, I tell you, this is like weather forecasting. Tomorrow it looks like we're probably just gonna kind of limp along. We probably stay in a confirmed uptrend barely. So I just wouldn't put my toe in the water right now. I just kind of wait a little bit. The Dow at the end of the day did fall 0.2%, and the S&P moved lower by 0.3%. Not a lot, but the Tech Composite also is down. So. Again, it's like it's really not. This is really not a rally. This is really not a rally that we can count on. That's for sure. Boy, I tell you what. Let's take a look at some of these shorts that I've been putting on here. On the shorts, basically I have 5 shorts out there: Hershey, Palo Alto Networks, Starbucks, Costco, and Bill.com. Now these have been improving, but they're all underwater. Every one of them is underwater. So don't recommend getting into any of these shorts right now. I do think they will improve because I do think we're gonna move up and then we're gonna pull back down. Of course, I'm protecting myself because remember, these are bull put spreads, so I'm limited risk on this. Basically, I'm limited to the zero value, so you put in money and then hopefully you take money out at the end. If you don't, you just extend it out. That's one of the things I like about the bull put spread. And as a matter of fact, I did this once with Costco. So basically, you're only in it for as much as you put in it, and then you go to zero. That's one of the advantages. One of the if you're considering shorting things and using puts, you got to be very, very, very careful. And the reason that you do is because potentially you have unlimited risk when you write a put. Now, of course, that in reality doesn't happen, but if a stock goes up on you, and by the way, in downtrends like we're in now, they have rallies that are the most violent to the upside. It's very, very counterintuitive. But if you're buying puts, you really need to consider doing spreads, because with puts, if it goes up and it gets exercised, by the way, it can get exercised if it's an American style option. I know I'm going through a lot of stuff here, but basically if it gets exercised early, you could be in for a whole lot of pain. So if you're going to short the market, I kind of recommend looking at something like a closed, something like a bear put spread or a bear call spread. Those work as well as work very well here. But basically on Hershey, a little bit of improvement, but I'm still at a loss. On Palo Alto Networks, I'm still at a loss there to Starbucks. That one is is moving in the wrong direction. Hopefully this will turn around. Costco, same thing, and Bill.com. So I'm basically down on all of these, but here's my strategy. We're in an overall downward market, so if I don't get the right results, I will roll them forward. That's one of the great advantages you have with spreads, is that you can buy them back and then push them forward. Now, it does cost you, but you can do that, and that's one of the great things that you can do with them. And so eventually, if you just keep pushing it forward enough, you either lose a very little or break even, as long as the market is going down overall. So hopefully that works. So let's look at Starbucks SBUX. And the reason, this is another one I'm looking at very carefully, because this is sort of a reopening trade type of stock here. As we're getting over the pandemic, people are going to go to Starbucks. Now, here's where I shorted it. Boy, this was not a very good short here. By the way, and you know what? I got too excited. I kind of got full of myself here, and I shorted it when it was off of that 21-day line. The best place to short it is either when it's above the 21-day, or in this case, above the 50-day line. I see it ratcheted all the way back up here, and now it's starting to get weak. And that's probably a much better shorting. I know it is a much better short than where I did it at. So hopefully the overall trend continues on this one. And I have a little bit of time on this one. I think I have July 15th on this one. So not too bad on that. So that's kind of the long and the short of it. Let's kind of take a look at sort of all the way the stocks went on the short list. And for the short list, this is basically the stocks that I have shorted using the bear put spread strategy. And I've got Costco, Palo Alto Networks, Hershey, Starbucks, and Bill.com. And as you can see, except for Hershey's, they're all moving in the downward direction. Hopefully that will continue throughout the week. And if it does, the value of the spreads will increase. Currently, I have no long positions. I can't show you the short portfolio because basically it's all cash, and there's nothing to show you there. So hopefully we're going to get something that looks good. I'm looking at possibly entering a position on the XLE, and thanks to one of the great people in the Discord room, they sent me some information from Market Rebellion. By the way, that's a very good site if you want to subscribe to it. Some unusual options activity on XLM and also on XOP. So those are two ETFs that look pretty good, and there's a lot of option activity for the upside. So if we're looking to go long here, that might be kind of where I'm looking. So just kind of a teaser before we get to the questions, let's look at XLP. XLP. This is the Spider Select. Now, this area has been area has been beaten down because of everything. So the XLP is this is consumer staples. This is considered a safe harbor, and it has been moving up. So I am interested in this one, but here's what I don't like about the XLP, and that is that the 50-day line is moving towards the 200-day line, which means that there's a potential death cross here. The one I do like long is the XLE, and this is the ETF that covers the energy sector. You'll notice that it looks like it has bounced. I'm hoping that's right. See, it came down here and then boom. This is basically, it came down on Thursday. It was rallied on yesterday. On Friday, and then it's rallied on Monday, and it's up after hours. So I do think this one is likely to have gotten a good bounce here. And interestingly enough, if you look at this, it bounced basically right at the bottom of the consolidation. It's so interesting how programmatic traders use these resistance points. But the floor for the XLE is basically 70.44, and currently we're at 74.06, so we're above that. So it's made this bounce. I'm kind of predicting that it will probably move up to the pivot. The pivot being basically at 80.22. So I predict that this is going to be the action, at least in the next few days. Now, will it go straight up? I hope so, but you never can tell. So I think we're looking at about a 6-point move. And then if it can move above 80.60, obviously, then it's going to go into the buy zone. But right now in this kind of market, buying at the buy point, by the time it gets to the buy point, it's already out of the cat's already out of the horse is already out of the barn. So you got to buy really on reversals. And I do think that with the XLE, we have a reversal line there. I'm going to put this is not really a good reversal, but I'm going to go over here to the weekly chart. This, I do believe, it's going to move up to the 21-day line. So that's kind of where I look at that. So I do have and I haven't bought it myself yet, I sort of have a buy alert if we get a strong day tomorrow. That's a lot of ifs on the XLE. Well, thank you, everybody. Thanks for waiting. Thanks, Lisa, for taking a question. Let's look at BYD. Now, BYD-DF, this is Build Your Dreams car company. And this is the one that that Warren Buffett owns a lot of. Well, he owns 10% of this company, and he bought it quite a while back. So Berkshire Hathaway owns about 10% of it, and it is doing well. It is coming up through this. There is a cup with handle, and there was a buy point here at about 39.71. It's currently at 40.25. Would I buy this stock? No. Would I buy it? No. Part of the reason I wouldn't buy this one, and it has nothing to do, it's just I'm spooked right now with the Chinese stocks. Yes, I mean, we did see some movement. We did see BABA move up a little bit, but gosh, I just cold feet here. So with regard to Build Your Dreams, I would have to say don't build your dreams. I wouldn't do this. Don't build. So don't buy it. That's what I would. That's kind of my. That's kind of my thing. I wouldn't buy this one. I wouldn't buy this one. It's not that I don't have anything against the car companies, but I think a Chinese car company in a downward trending market with potential trade embargoes, with rising interest rates, not a good look there. So I would not recommend this one, just because I just think that I don't think the risks outweigh the rewards on this one. I just don't think it does. So I would not buy Build Your Dreams. But I appreciate the question very, very much. So I do appreciate the question. What should we do? What should we do with our bear put spread? Well, the question is which one. Here's the thing I'm doing with my bear put spread. I'm just holding it for right now, waiting for it to, waiting for the stock to reverse. Now, here's the thing with a bear put spread. What you can do is if you run out of time And, we do have a little bit of time on that. You can extend these things out. Now, it does cost you a little bit of money, but because I think the overall market is in a downward trend, I am going to hold mine. That's what I'm going to do. Now, you can just close it. Unfortunately, you'd probably be in a losing position on that one. Currently, let me just kind of put my calculation in terms of what I'm seeing on the bear put spread. These are the bear put spreads that I'm looking at. As you can see, they're all in losing positions, but because they're bear put spreads, one of the good things about this is that because you paid for it up front, the most you can lose is the amount of the cost. Okay, so that's the maximum that you can lose on these, is the amount of the cost. So if let's say it did, Hershey's just never comes back into this range. It doesn't come into the from 200 to 210. Basically, it just goes to 300. Well, the maximum you can lose here is about 220, because that will be pretty much the difference between the spread, because you bought it at the market. So that'll pretty much be the amount that you lose. I mean, a little bit of fluctuation at the end, but as they go to zero, that's going to be about the exposure that you're going to have. Now, if it's up, but by the time we get July to July 15th or close to July, let's get into July a little bit, and we're going to get in there pretty quickly, we may have to extend this. But I usually wait until it's about 1 week or so in, and then I make a decision, am I going to extend this? And if I do, of course, and you're watching the show, I'll show you how I do it. But I'm probably going to roll this one forward. That's my guess. I haven't made a decision on it yet. That will cost me a little bit more money here, but we still do have some value. So we still have $77 in value here. So what I can do is roll this one forward, hopefully, or maybe roll this up and out. So that's probably what I'm going to do here. Is I'm probably going to look to do that on this. Now I do have 4 spreads that are all expiring in July. In July, so I'll probably be next week. I will probably be rolling these out, but you can close them. You can close them, and this would give you would unfortunately, I hate to show you this, but unfortunately you would take a loss on it. But what I'm probably going to do on these is I'm just going to roll them out, and I'll show you how I do that. And what that'll do is that will cost me a little bit of money, and of course that will be added to the overall cost, and show you it will lower the profitability of the trade. But hopefully, I do believe that the market is going to be moving lower in the next in the next 6 months. In the next 3 to 6 months, it's going to be moving lower, I believe. So that's the reason why we'll probably do a roll out on that, or we may do a roll up and out if we're really in trouble, but probably a roll out. That's probably what it's looking like. Okay, let's take a look at a question from TikTok. Thank you, everybody, for taking a look. By the way, we can't see anything. Well, part of the reason you can't see anything is because I'm actually broadcasting this statically on TikTok. If you want to see it, live, just go to my link. Click on the link, and you'll see it. It says Beacons. Click on that, and you'll see a direct link to the live that's being produced on YouTube. So on YouTube, we're showing all the charts and everything. Can't do it, unfortunately, technically, on TikTok. I wish we could. That would be fantastic if we could. All right. Let's see. Are you have any thoughts on what are your thoughts on oil tankers? Well, I'm glad that we have them. I'm definitely glad we have them. But let's look at some of the oil stocks. Let's look at. I want to kind of look at Google, not Google, Goggle, G-O, G. It's not G-O-O-G-L-E. It's G-O-G-L. Goggle, Goggle. That's a shipping company. It's called Golden Ocean Group, and it was up a little bit today. Golden Ocean was up a little bit today, but it is still trading under the It's trading under the 10-day line. Now here's my take on tankers. I think you're going to see I think you're going to see demand for tankers, more demand for tankers by the end of the summer. But right now, with this, it's just such a wild card because you have this war going on in the Ukraine, which is cutting supplies, but the the Russians are getting some of their oil out. I don't quite know how they're doing it, but they're getting some of their oil out to China. And I don't quite know how they're doing this, but I do believe that there will be continued heightened demand for tankers because I do think that a lot of people are selling illegal oil. I know that Venezuela is selling some oil, and there are a lot of tankers companies out there that are using. Of course, Venezuelan oil is embargoed, but it's being sold throughout the world as this usually happens. So because they need the hard currency because basically they're starving. So I do think there's going to be continued demand for tankers. Now the question is, can you buy any of these tanker stocks? Well, at least in terms of the area. Let's look at the shipping transportation area to see kind of what's going on there. But shipping, let's go down to shipping. Let's see if I can get it up here. It's transportation ship. That's what the group is. So let's go to that. Yeah, transportation ship. There we go. So taking a look at the taking a look at the group. This is the transportation ship group, and it has fallen below that 200-day line. But as you can see, it's making a move up, and there's been some buying. Last 2 days have been strong for this group. Now, why do I look at this group? Well, the shipping group is a very, very, there's a lot of people in this, and most of these companies are quite small. A lot of them are based in Greece, of all places. And so these stocks tend to be relatively volatile, but they tend to pay very, very good dividends. So the question is, where are the best ones to look at? Let's look at Starbulk. This is sort of the leader currently. And as you can see with Starbulk, it's pulled below that the 200-day line. The 50-day is falling below that. So that does indicate some weakness, but it does look like it may be bouncing up above the 10-day line. Would I buy this here? Well, it's starting to look better. This might be a good entry point because basically if you draw this line here, the question is it reversing higher? Well, it does kind of look like it potentially is, but I think to look at this on the weekly chart. So this might be something you could stick your toe in, but I'm not really very bullish right now. I kind of want to see more strength in this group. And the names to look at, by the way, and I don't own any of these groups right now. So one of the ones is Starbulk. That's your biggest company that's in that's in it. Let's see. Let's look at the other ones. This is transportation ship. Yeah, there we go. So that's transportation rail. We don't want that. Transportation ship. All right, transportation ship. The biggest ones in here in this group are Starbulk, PANL. That's one of the ones I don't know. It's called Pangea Logistics, and Golden Ocean. So let's look at Pangea. I haven't really looked at this one. This is actually a better stock right now, I believe. This is a better stock. Got a better chart. It's very, very cheap. It's $5.44 stock. The question, would you buy it here? Well, I don't know. This isn't looking bad. Looking on the weekly chart, there is a buy point on it at $5.98. Boy, I tell you, that's pretty cheap. Right now it's $5.44. So the symbol on this one, PANL. Let's look at the kind of the look. I want to see this one. It's got an acceptable checklist. It's 67%. Not a great one, but an acceptable one. Would I buy this? Well, I don't know. It definitely has some good fundamentals. The sales were up 53% in the last quarter. Profits were up 289. So this is one you might want to put on your watch list. I don't own this one. It's called Pangea Logistics Solutions, PANL. And that one might be something that you want to look at. Again, I don't own this one, but in a strengthening market for oil, with shipping being at a premium, this one might make sense. It does have a little bit of short interest, but it's basically just a it's dry bulk commodities, and I think that might be something that works. Oh, he died. The CEO died and he was replaced. So anyway, so that one might be one you want to look at. Not particularly great, but hey, not particularly great. All right, let's look at Sun, SUN. This is for Charles. Thank you again for watching the show. Appreciate it. Sunoco. Oh, I like Sunoco a lot. This is actually a very good company. I'm going to go to a bigger chart here. By the way, if you're looking on TikTok, you want to see these charts that I'm analyzing, super easy. All you have to do is go to the profile, click on the link, and then it says beacons. Click on that link, and you'll see a direct thumbnail that you could push that take you right to YouTube, where we're showing all of the charts. All right, so let's take a look at this this chart here on Sunoco. It's bottomed. That's very good. That's essentially a pullback. The pullback was to $34. It looks like a very nice bounce on this one. Even though oil has been down, I think this is a very good company, and I think that the chart will tell us that. It's at the bottom of the consolidation. It's a major distributor for automobile fuels, with the prices this summer of automobile fuels. And by the way, for disclosure, for full disclosure, I actually worked for this company. Not for a very long time. I was a consultant for this company. It's actually based here in Dallas, Texas, as you can see. And it basically, and let me just tell you a little bit about it. I have a little bit of inside information. I don't work for the company anymore. I don't have any I don't have any insider information on this, but I did work for this company. This company controls all of the distribution of gasoline to 7-Eleven, and that's very significant. Now, half of this company is owned by Energy Transfer Partners, or EP. That's also a Dallas-based company. I like this company a lot, and of course, I work there, so that's why I liked it. But I like it for other reasons too. I don't own it, but it's got extremely strong cash flow, $7 a share. The PE ratio on this is 6, which in normal times would be a red flag, but I just think that this company is going to potentially do quite well, just because it's bounced off of the consolidation and it's probably headed higher. So I like this stock a lot, and I don't own it, but let's put that on the long list. And that's a long list. Okay, and that is, this is Sunoco, SUN. And it's a limited partnership because basically this is a master limited partnership. This isn't really a stock. Most of this company is owned by Energy Transfer Partners, and they moved their location from Philadelphia area, actually Radnor, Pennsylvania, to Dallas. So thank you very much for that question. So I do like this company. It's got several little things that I don't like, and one of them is on this checklist. It's only a 56 checklist. Normally, I want a higher than that. Part of the problem is it's less than, it's more than 15% below its all-time high, but everything else is good. It's being accumulated. It's got a relative strength above 80, and it's got earnings above 80. The reason that this fell down here is because if you go on the Wayback Machine, and this is the Wayback Machine. Let's go with the monthly. Yeah, on the Wayback Machine, you can see its all-time high was way back here, basically in 2013. See, that was its all-time high. So it's lower than it's 15%. It's more than 15% off of its all-time high. So I really don't think that, because the company has changed so much, I really don't think that one counts. So I think you have a green light on this one. I wouldn't go in with big. I wouldn't go in with this big, but I do think it's pretty darn good. Thank you for bringing that up. I really appreciate it. Let's look at WLKP. WLK, oops, P. All right. And that's Westlake Chemical. This is based in Houston. I know this company because, for full disclosure, I have owned this one before. Never worked on anything with this. I did work for a competitor of this for again, a consult deal. Seems like all my deals are like that. That's before I started trading full time. But this is looking pretty decent. It looks like it came off well off this floor at 22. It's got an upward trending relative strength. That's very good. The relative strength line is going up. By the way, that's something that you want to see. The strength of this, that's really the major indicator. Is this company becoming stronger versus the rest of the market? Now, unfortunately, the rest of the market is weak. It went up a little bit, and that's why we have the fall through day with the weak market in a confirmed uptrend. But overall, the market is relatively weak. So this is improving against a weak market, which does show strength. That's good. It's in a. I'm not sure if it's in a great area. The problem with this basic chemical area that this is in, very, very low profitability. But I suspect that this, they will have, they will show a profit this year. Let's look at the fundamentals. The sales are up nicely. Up until September of last year, you see, we were actually declining in terms of the profitability, but the profitability has went up. Not a whole lot. Again, this is a very low margin business. Very important business, but very low margin business. The cash flow is pretty good on this one. And it does look like it's sort of trying to stair step up here. Yeah, sort of stair step up here. But would I buy this one? I would watch list this one. I don't like this one as much as I like Sunoco. So just my opinion. All right, let's go to Polly. Thank you, Polly. Appreciate it. HRB. Is that right? HRB. All right. HRB. Okay. H&R Block. This used to be a great company. And I think it still is. I'm just a little skeptical. I really don't have any really thing to say about this one. Let's look at the fundamentals. I'm just kind of looking at the fundamentals. Part of the reason I'm looking at the fundamentals, normally I don't look at the fundamentals that much, but in this kind of market where basically, nothing is getting rewarded. I mean, the Fed is raising interest rates. They're buying back bonds. So you can't really get, you really don't want to fight the Fed. And we're in a position where we want to be in sync with the Fed. In those kind of situations, typically, I think it's really important to look to fundamentals because fundamentals will look out about 6 months, and that gives us a little bit better indication as to what's going on. This has an extremely low PE ratio, which normally is a very bad thing. But in this environment, not so much. This market is actually rewarding. It's actually rewarding low PE stocks. Now, of course, in your finance classes in college, they always say, well, the low PE stocks, those are the greatest ones. That's essentially what Warren Buffett says. Not all the time, but he kind of says that. Yes, if you have an unlimited time horizon, yes, that's great. But a lot of times when things change, when the growth picks up, companies with high PE ratios, i.e. the internet stocks and the computer stocks, they'll go up. So I'm not really a fan of looking at low PE, but in this kind of environment, yes, we kind of got to look at it. H&R Block. I think, to be honest with you, this one really should be acquired by Intuit. Okay. It's true they've been around forever and a day, but I just I am not a fan. The market has moved against them. The world is an online market for preparing taxes. Unfortunately, H&R Block is basically saying, well, we know we lost the battle for individuals, which they pretty much did. So now we're gonna emphasize small businesses, which is a good thing because usually their taxes are more complicated. But I don't see this one over the long time winning. They have very good cash flow though. So would I recommend this one? It's got a 99 relative strength, which is incredible. But would I recommend it? I don't know. I'm a little bit leery on this sector. The chart looks good. I have to admit the chart looks very, very good. And the checklist is good as well. I mean, it's a 67. That's my minimum, but still, that is a very good checklist for HRB. So would I eliminate it? No. But would I be excited about buying it? No. So basically, I would on this one. My gut feeling on this one is I would watch list, and that's really the weaning way out. But so I don't think I think that once the market turns and there's a number of true leaders in the market that are available, then I think it's going to be a lot. I mean, then I think then I think the then I think the decision is going to be extremely easy. But until then, until then, I just don't think it's going to be that good. So here's what I would do with H&R Block. I would watch list this one, and I just don't think that it has the oomph. So my opinion, but I don't think I would watch list this one. All right, bear put spreads on the XLE on the spider. I'm a little bit afraid to do it on the spider, but you're definitely thinking the right way. I do think that my gut feeling on this is that we should wait for a turn and then do a bear's put spread on. We should get ready because right now the spider is moving higher. The spider is moving higher right now, but the minute it turns, then I think we could definitely. The minute this turns lower, and I think it's going to, because I think what's going to happen is the spider's going to come up to about 400 here. See, and then I think we're going to get resistance. You see how I've drawn this reversal line here. I think we're going to get a movement at this reversal line, but I don't think it's going to go above the reversal line. I think it's going to go below the reversal line. So I think it's going to come up here. It's coming off of this. It's coming off of this consolidation here. This consolidation started up here. Now, what I think is going to happen is it's going to come right up to about 400, and then if it moves above that, then we could go long on it. But I think it's going to get rejected here. If it gets rejected, then I think that's a really good bear put spread. So what I'm going to do here is I'm going to set an alert on this one, and for a price of basically about 400, which is about the reversal, which is about the reversal line on this. And what I'm going to say is, reversal line reached. Consider bear put spread. So that's kind of what that's kind of what I would look to do with this one. Line reached. It's good when I can. It's good when I have. It's good when I type well. I don't seem to do that anymore. So, anyways, this is where I would think it's going to reverse. If it reverses, then I think we could do a good bear put spread on this. But I think other than that, no, I wouldn't do anything right now. It's just kind of weird. I'm a little bit apprehensive. All right, let's look at the XLE, and thank you very much, by the way, for being a Discord room member, at least for the time that you did. I hope that everything is well with you. And let's see, XLE. Let's take a look. I do think that we have a bounce on this one, and the bounce came basically a little bit above that 200-day line, but we've had 2 days on the bounce. I do think this one is headed higher, just because I think that energy, we did have that big fall off on energy, but I do think that energy is likely to move higher. Let's take a look at West Texas Intermediate crude. I want to look at I haven't looked at this for a while. I think it's the WTI. Of course, it's the West Texas Intermediate. This is the stuff that comes out of the Permian. Let's see if I got that right. 0. I think it's W. No, it's the Israeli index. All right, let's see if I can. I don't know this one is, let's see if it's oil. O'Neill. I want to get the West Texas Intermediate, and I don't know the symbol for that one. Okay, so let's. No. Okay, I can't get it. So, with so oil price. Let's do the natural gas because that's very interesting too. Yeah, that's one I do know. The nat gas. Yeah, there we go. Natural gas. So let's look at the natural gas. The reason I'm looking at this one is because this is going to have some bearing on the XLE. Not a lot because this is natural gas, and of course, and the XLE basically is Exxon and Chevron. But this has been moving down, but it looks like it's monitoring. Boy, this is really volatile. Oof. This is really, really volatile. Okay, so I would say on that, basically on the XLE, I do think it's reversing higher. I'm still not ready to jump in, but I'm getting there because I do think that we have seen the oils pull back. And remember, the XLE is primarily Exxon and Chevron. And oh, by the way, Chevron is going to be moving most of its people from San Ramon, California to Houston. Unfortunately, California looks like they're going to probably eventually lose another great company. By the way, that was when I'm from California originally. That was the largest corporation by volume in the state of California. So it's very sad. All right, let's look at VNM because of the fundamentals. Interesting. Okay, let's look at that. That's interesting. VNOM Venom. Of course, that is. I think that's Viper. I like the name of that. Viper. I wish I had a Viper. Remember those cars? Like V10? They were pretty cool. Anyways, yeah, I like the chart, though. I mean, it's pulled back. That's good. It's looked like it's getting a bounce right at the 50. I mean, right at the 200. That's the right place. You have decreasing. That's good on the volume. You have volume picking up. 2 days down, but people aren't selling, so that's very interesting. It's above average too, so it looks like you are right. This one is up after hours too. Yeah, this is a good one. So I agree with you. This is good. Looking at the fundamentals, let's go over there. And okay, look at that. Wow, the sales are up nicely. The profits are up even more nicely. So this is very nice. So I would say, yes, this one, you could possibly go long in this one. I like this one. So, I mean, it is, it's a higher risk because I'm not really convinced that this market is, I think this is more of a relief rally than a real rally, but yes. VNOM, M, is buyable. So that's interesting. I definitely think it is. I definitely think that it is viable here. Absolutely. I think it's bounced very nicely off that 200-day line, and the relative strength is moving up. It's a 94 relative strength, and I'm looking on the weekly chart here, and as you can see, this is sort of how it works. It's come down, it tests there, and there. So I think this one's moving up. So this probably is good up to about 30, 34. So very, very good. Thank you for that question. That was an excellent question, and I really appreciate it on that too. Okay, so Venom. So I'm gonna take probably my last call because I'm basically about 48 minutes. I don't want to run over too much, and let's take the last one from TikTok. Thank you so much, everybody. Let's see. Yeah, okay, yeah, about 3%. Oh, future for tomorrow. Yeah, absolutely. I want to show you that basically what the futures are saying is that we're likely to move up tomorrow, but it's going to be weak. It's not going to be. I don't think it's going to be very, very strong. So that's kind of what I'm looking at in terms of in terms of the prices. We are in an uptrend. We are in a confirmed uptrend. It's just a weak one. So be very careful here. What I'm going to be doing is I'm going to be putting out a I'm going to be putting out a a list of shorts, because I do think that once this market turns, and I think that we're likely to be in an uptrend probably for about 3 or 4 weeks, and then I do think we're probably going to go down further. This could be, at least for the next 3 or 4 weeks, this could be a very strong uptrend. But I think that eventually it's going to turn, and I think we have to be ready with potential shorts, because I do think that we will get an opportunity to short. I do think the overall market is going lower, and I think that by the end of the summer, we're probably going to be lower, and I suspect we're going to be at about 320 on the spider. So that's kind of where I'm thinking the market is going towards the end of the summer. And then, because I do think that unfortunately, we're in a downward trend. We have to get a little bit of the froth out of things. And so right now, just to tell you where I'm at, I'm 97% in cash. I do have some shorts, which are bear put spreads, and I may be adjusting those. So stay tuned, because I will show you how I'm adjusting these, probably to go long. I'm probably going to roll them out. I'm going to see probably next week what I want to do. If the market does not decrease, I'm going to probably roll some of these out for longer. So until until tomorrow, please, please. Oh, that's very interesting. Yeah. Venom is profitable and cash heavy. I agree with you. I mean, I'm looking at the chart, and I think it's pretty good. I think the Venom chart is pretty good, and I think that it looks like it's going to bounce off that 200-day line. So, and I do think the price of oil is going to stay high, and unfortunately probably go higher. So I think you've got a winner there, and I appreciate you bringing it to everybody's attention, because I do think that oil is going to stick around as being one of the biggest areas in the market. So until tomorrow, I'll be back tomorrow at 5, of course, and thank you, everybody. By the way, we do have a Discord room. If you're interested, just go to www.Dallas Trading Floor. Also, if you could, this would be a real help to everybody here, and that would be, to me, I'm pretty much the only one here. Please like the show, because that helps us get out to a lot of people. And I didn't realize how important this was. I was sort of a newbie to everything here, and I didn't realize how important liking something was. Believe me, it's very important. I've learned that. I've learned my lesson hard. So please like us, and then also subscribe to the YouTube channel if you can. That would be wonderful. And on YouTube, of course, likes are very, very helpful as well. So, and also don't forget to join the free Action Trade Alerts just by going to www.Dallas Trading Floor. Again, thanks everybody. I'll be back tomorrow at 5 o'clock. Everybody, happy trading.